It's about that time of day again. My name is Joseph. It's Wednesday evening, January 8th, 2017. This is your nightly newsletter. We're covering crude oil, S&P, gold, euro, and the FDAX this evening. Crude oil is bullish, but two key levels of resistance are telling us that the most reliable buying opportunities will likely come after a pullback into the battle zone tomorrow. The S&P is bullish, and a new spike in channel tells us exactly where and where not to be looking for the most reliable buying opportunities tomorrow. The gold is bullish, but a recent trap low tells us it's likely a little bit too late to buy now, and the best trading opportunities will come back at support levels waiting below tomorrow. The euro is bullish, trying to retest the high, but a key level of resistance is standing in the way, and the no trade zone lurking overhead may have the buyers waiting for a deeper pullback tomorrow. And of course, the FDAX is bullish, and today's trading range, very important for today's FDAX, the trading range tells us where the most reliable trading opportunities will and will not be, as well as where that target will be tomorrow for the FDAX traders. As always, another great day comes to an end. I got a great plan in store for you guys tomorrow. Another great newsletter for you guys and gals tonight. Before we jump into those charts though, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the YouTube video right now, not to worry, there's a link in the description of the YouTube video. Follow that link. Come join me on the blog at Sideways Markets and watch the full-length version of this nightly newsletter. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this video goes live. Follow me on social. I'm always posting important updates, charts, and updates throughout the day. Follow me in the lower left-hand corner on my many social media channels. And of course, below the video tonight, how easy is this? Every chart in the video tonight, you can download those charts by following that link below the video on the blog. And please don't forget to grab your free pass. Like I always remind you, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. If you do one thing here today, if you're not a member, make sure you grab that free pass on the upper right-hand corner. And please don't forget, if you're brand new here to the School of Trade community, we've got a great frequently asked questions page on our blog to get the who, what, where, when, and why. We're known as being the industry standard in futures trading strategies and professional grade education. Hope you guys have had a great week here so far. We made it through hump day. Tomorrow's Thursday, February 9th. Let's get this plan underway. Nothing as far as major news tonight. Nothing to worry about tonight coming out of the Asian session, and tomorrow is kind of an empty day. There's really not a lot to worry about tomorrow. We've got, of course, the jobless claims every Thursday morning, but I haven't seen people react to jobless claims in years now. So although it is billed as a market-moving event, it's not expected to move the needle very much tomorrow. So really kind of a wide open day. We may see a bit of reaction early in the session from China, from news from the trade balance in China, but tomorrow looking like a pretty wide open day for us here. And of course, don't forget, we'll be trading, of course, executing the strategy tomorrow with all of our students in the trade room. We'll see you guys there at 8 o'clock Eastern time with all of our advanced members. So wide open session tomorrow. No major news on the calendar. That makes it pretty easy for us. Shall we kick off? Let's do this. We got crude, S&P, gold, euro, and FDAX. Crude is bullish and trading right at the double up resistance this evening after today's inventory report sent prices racing higher. This multi-tiered channel tells us that it will be wise to wait for a pullback to the low of that channel, but the strength in this market tells us that we may not get a full pullback. We may only get a trap below that 52.20 before a retest of the high. The big variable will be this resistance trend line coming down overhead. As you look at this right now, and pretty wild ride. We talked about this in last night's newsletter. My exact words were, if we see some strength to begin the session today, then this may be a bull day for pretty much the entire time until the report comes out. Well, the report came out, and of course the report just added more fuel, right? No pun intended. Well, maybe there was a pun intended. Added more fuel right to the fire going higher here. So as we talked about in last night's newsletter, we were 2 days in a row down, right? Monday and Tuesday. We were waiting to see if we got some strength. The day pretty much opened up on strength, and we were looking at this as a bull wedge, as a bull spike in channel, and of course it really played very well for the U.S. morning session. So if you knew what you were looking for, you knew that bearish market turned bullish bright and early this morning. It was pretty obvious, and it was all about buying those dips, right, as the market moved higher. As you can see here, that day starts off with a bull spike in channel, but that didn't last very long, right? middle to late morning, it breaks, right, and then makes a run higher. The news reaction, of course, was a double up off the news. That was the easy target for the news traders here today. And of course, a major double up, right, on the way higher. And it looks like that double up is really kind of what was most important here. It looks like the double up was really the most important piece of information. Now, from there, we know we have the bulls have control. They obviously have control. We haven't seen anything from the bears yet, but it's likely we're not going to see buyers want to buy into that double up. So we go looking for price to pull back so we can find a way in at a lower price. Now, always, 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 in a bull market, the most reliable buying opportunities are going to be in an area of support where there's enough room for a big profit target. So let's go find some areas of support. Trend line of the low. That trend line really, I think both of these trend lines, that support trend line and this resistance trend line, are probably going to be pretty important pieces of information. Now, with that trend line, I'm doing my best here to find some sort of channel up here, right up to the highs. There's your midline right in the middle. So it looks like a multi-tier channel. At the very most, it's a multi-tier channel. And we look for the rotation back down to the low, right, for them to move back up to retest the high. At the very least, it's just a rising support trend line, and that support trend line, right, will be where the goods are for all the buyers looking to buy low at support. Another area of support here is going to be this first pullback after we reach that double up. You know, we talk about this a lot on the newsletter. Whenever we reach a market objective, right, like a double up or a measured move, we expect that first pullback to define for us kind of like a trading range, right? And then our goal is to buy the low of that range, right? Buy the low, buy the low, buy the low of that range. So once again, in a bull market, most reliable buying opportunities, right? If you want to find the winning trades, they're going to come at an area of support with enough room to incentivize buyers, right? A lot of buyers, right, to buy on the way back up. So, two levels of support. One here, one here. You know, obviously these are support as well, but these two areas here, a lot of strength going higher. We may see it just trap low and try to right and punch back up. Again, buying at support. Support's easy. The hard part's going to be this variable right here, this falling resistance trend line. So if we slide back in now, if I find myself now sliding back down, now I don't want to buy now because I'm buying into an area of resistance. In a bull market, find an area of support where you have enough room for a big profit target. That trend line is going to be a big deal here. The ideal scenario now, of course, would be price back to an area of support, tag the trend line, right? Tag the, right, get below that 5220, and we can buy it from there. Maybe not from there. Grind lower, grind lower, grind lower, get into the battle zone, incorporate the 5202 support, incorporate the low of the channel support, right? And then up we go from there. So really right now, obviously the bulls have control. I want to find a support level that allows me to buy with enough room for a nice juicy profit target, and this area of resistance is likely going to be the big spoiler here tomorrow. Now, as the price goes lower, right, with that overhead resistance, the only way we can feel confident turning this into a bear market, look back in time, right, real strong move higher, holds a pullback and keeps going, that's what we're going to need to see for the bears. It'll have to show us a real strong move, hold a pullback, and show us some continued strength here if we're going to be able to start calling this a reliable bear market. So keep an eye on those support levels below. Again, keep an eye on those support levels below, 5220, 5202, right, low of that channel. Try to incorporate these support levels as this price pulls back, and just try to make sure here, right, that we're above, right, that we're above that resistance trend line as we try to attract more buyers with this price going higher. What if price goes higher here? You know, if price goes higher, we want to see price go on some strength, right? You know, there is a chance here that this strong move may turn into a bull spike in channel. Like I said before, I'm kind of reaching here as far as where this channel is going to be, right? The high of the channel is very much a guess right now. I'm piggybacking off of those, right off that higher low. So if it does just go higher, keep an eye on this now, right, for a spike in channel, right? And then look to buy the low, right? Look to buy the low, right, of that potential spike in channel, right? We'll know more about that tomorrow with all of our students in the trade room starting off at 8 o'clock Eastern time. Let's keep rolling. From the crude oil to the S&P. The S&P is bullish and trading at the measured move and the double up resistance levels this evening, which tells us that we're better off waiting for price to pull back to support levels below or show us some strength and push through to new highs tomorrow. A very, very interesting chart here for the S&P. The day starts off obviously, sympathetic for crude oil, right? Pulling back lower, but then we see a very strong move. Once we see that pullback hold, right there on strength, then it's on to the upside and it's time to be a buyer. Draw that trend line off the lows, combine up to the highs, and that gives us our channel. Our channel pulls back to the low, the buyers buy it up, and we retest the high. Exactly what you'd expect from a bull market. Buyers find support, an area of support where there's enough room to go back to retest the high, right? Enough to incentivize more buyers to participate, and price shoots back up to retest the high. At this point now, we find ourselves at the measured move, at the double up, and the way that I describe a market like this is the bulls had their opportunity to buy low, they bought low, they retested their high, they've achieved the market's objective. Now, when we achieve the market's objective, we then start looking for one of two scenarios. One being the most reliable, pull back to another area of support, an area of support where there's enough room overhead to allow buyers to get a nice big target, right? That area of support coming in is going to be a rising support trend line, the battle zone, right? This whole area basically right in here, right? This whole area right here, an area of support where buyers can dig their heels in because they have enough room for a nice juicy target. Right? We talk about not wanting to buy high, but what is the real reason why buyers don't want to buy high? Because there's no meat on the bone there. The only way they make money is if price continues to extend that trend higher. We want to buy low just because it's much easier to make a profit because we've already proven that market wants to go higher. Now if we can buy low, buyers will come in, re-enter the market because they'll be incentivized, right, with a profit target going back up to the high. So in a bull market, I want to buy at an area of support where I have enough room for a nice big target. Obviously, if we just pull back a little, that's not enough, right? We want to get a nice deep pullback here. Again, rising support, again, into that battle zone and look for those buying opportunities, right, in that area of support. What's the second scenario here right now? The second scenario would be, hey, this may not be a bull spike in channel. It sure looks like it, right? But for all I know, we may be now having, again, that bull channel, right? The buyers wound up. They broke back to the high. Well, heck, this thing may keep going. And if it keeps going, I want to see proof, okay? Again, like I said earlier, when the market reaches its objective, we expect to either see price pull back to attract more buyers, or the market objective might be hunting for something else, maybe the prior day high, right? Maybe we're looking at a prior day high test early tomorrow, and we may see a breakthrough the measured move and the double up. If we see a strong enough breakout, my definition of strong enough is get that moving average up, in this case above, it would be that 2292, right? Sorry about that, 91, 99 there, right? Get above the double up, and then we can start looking for that breakout pullback up to that prior day high.